Greetings, colleagues and friends. Thank you so much for joining us back on our channel, Real Estate Insights. I'm John Rurkowski, been in the business for too long, since 2001, and I've probably seen more transactions being given the position I was in than anybody in the state of Florida. And I want to convey this information and education to you to help you make wise real estate decisions. I'm joined today again by Mark Hogrefe from Sun Point Home Loans. Mark, how are you today?
I'm doing great. Thanks for having me.
Excellent. So today we're talking about self-employed buyers, which there are a lot of them, right? And for those of us who, you have a paycheck, you're working for somebody else, you're W-2, and you got got pay stubs coming in every 2 weeks or weekly, and you do normal tax returns. Well, doing loans for self-employed buyers is quite a different animal, right, Mark?
Yeah, it can be. I mean, first off, we do loans for many, many self-employed buyers. Maybe it's a sign of the market, but there's more gig workers than ever. You know, uh, People that work for Amazon or delivery services or whatever it may be. But yeah, there's tons of home buyers that are also self-employed too as well. And there's some nuances when it comes to that. Traditionally, most banks, credit unions, when you're a self-employed buyer, they're going to want tax returns. They're going to want to see how you claimed your income through the IRS. And why is that? Well, essentially, that's the only way they can truly verify, hey, how much you make. If you tell the IRS you make a certain amount, well, that's essentially what the mortgage company should be using for qualifying. Okay. And however, the industry has created many type of additional programs for borrowers that maybe don't meet that mold. They essentially maybe not claim enough income on their tax returns to qualify. We're not the IRS, and we understand if you're, working with your accountant and you have plenty of write-offs and your bottom line profitability is not showing as much as maybe you truly make. Well, there's plenty of other programs that are out in the marketplace now that help with that. These are called non-QM loans, non-qualified mortgages, and they're very popular. There's ways that we can verify income besides using the tax returns. And those can be with like bank statements. We can look at deposits of a business bank statement over the last 12 months or 24 months to determine your revenues that way. And you can qualify based on those instead of tax returns. There's 1099 loan programs. What does that mean? Well, if somebody's a contracted employee or, works with many, companies get multiple 1099s, we can use those for qualifying in lieu of tax returns. Also, there's profit and loss programs. What does that mean? Well, instead of showing bank statements or 1099s or tax returns, we're just asking for a profit and loss from maybe an accountant or a CPA to qualify that way. So there's plenty of programs available for self-employed buyers. Now, if you're able to show your income on tax returns, that is going to provide some benefit. That's going to be able to qualify for better interest rates, lower down payment options. When you are going in these alternate programs, these alternate income documentation, such as bank statements, 1099s, or profit and losses, it is going to require a little bit larger down payment, typically 10% or more. And the interest rate is going to be a little bit
Higher.
above market lows. I would
Mhm.
say on average, maybe about 0.75% and work their way up, depending on, credit score and down payment requirements. But, you know, people that are self-employed, if they don't show enough money on their tax returns, they shouldn't use that as a detract for buying a house. There's plenty of programs that allow, buyers like that to get into the marketplace today. So these are great programs. We do a ton of these type of loans, and we continue to see more and more buyers that can utilize from this.
Yeah, you think, when you're driving around today, think about all the shops you drive by, whatever they may be. Nail shops, hair salons, whatever, barber shops, hearing aid stores. Those are all self-employed owners, and a majority of our country is probably run by small mom and pop businesses who, they've created a business for themselves. And I took a class years ago when we were opening the commercial division, and I went to the Business Brokers of Florida's seminars, and I was amazed at how many people open their own businesses with the idea of making, creating a retirement plan from their business. And what ends up happening is they basically just created a job for themselves. So, like Mark said, luckily there is many different ways for a loan officer to look at their bank statements, profit and loss, the bookkeeping, because a lot of times, they're writing things off for different reasons, for tax purposes, which would hurt them given just the tax return. But because of the different ways they can get, show Mark the numbers, they're eligible for a loan. And it makes sense that their interest rate is going to be a little bit higher. And obviously the down payment might be a little bit higher, but at least they're still eligible to get a loan. So, Mark, I think luckily there seems to be a program for everybody out there. And if not, you'll probably research it and find one.
Yeah, I mean that's the sign of the market right now is there's more programs available for self-employed buyers than there ever has been. It does make my job a little bit more challenging because we definitely don't want to miss opportunities, and we have to sometimes search through programs to find the perfect type loan for the self-employed buyer. But again, that should not be somebody doesn't write enough income on their taxes should not be a detract from them buying a house. And
Right.
it's because of more and more gig workers and self-employed buyers are in the marketplace today.
Mhm.
These programs are ideal.
Yeah, and luckily there's a program for them because again, it's probably a majority of Americans are self-employed. I mean, there's self-employed, like you mentioned, gig workers where, big old corporate America isn't there anymore. The times have changed and we're becoming more and more self-employed-ish type of a country. So, well, I'm glad there's a
Sure.
program for them. And I know that you're always there to answer questions for anybody who's got one, whether, just to see the most important thing, if you're looking to buy a home, are your documents in order? And what does that mean? Have you spoken to a local lender, loan officer who can tell you what you're qualified for? That's key. Okay. And I'm always going to suggest that too. We're not going to ever look at a home unless you're pre-qualified or pre-approved to buy a home. So, well, Mark, I really enjoyed doing these segments with you. In a very brief time, we learned a lot about different mortgages, and I know you're a walking encyclopedia when it comes to that. So thanks you for always being there for me and my customers. And if you have any
Thanks for
questions at
having
all, Mark's information is directly below in the video here, as is mine. If you like these episodes, subscribe so you can learn more about the home buying and selling process. And to my realtor colleagues out there, I'm always looking for great teammates to align with. So if you're interested in joining me and Mark, let me know. Mark, thank you again.
Thanks for having me.
All right, we'll see you on the next time. Everybody take care of yourself and be well. Peace.